Good day from Cairo. So the cryptocurrency market took a nosedive and everybody's crying wolf. So that's going to be my first talk about cryptocurrencies and financial markets. My name is B. A lot of my friends call me CryptoB for good reason. I'm a cryptocurrency enthusiast. So I'd like to start by saying that a general rule of thumb when it comes to trading: do not trade with money you can't afford to lose. It's a recipe for disaster. That being said, 90% of traders actually fail in trading, and that has little to do with strategy. It has a lot to do with equity management, with market psychology, managing fear and greed, and the like. Now, when it comes to cryptocurrencies are a very unique and unprecedented asset. Accordingly, they have their own rules. They don't follow most of the fundamental or technical analysis other instruments follow. And that being said, you really have to educate yourself, know what this is all about before making any decisions when it comes to trading, and I really advise paper trading at first. Now, if you're following the headlines, you're probably worried about the volatility currently rolling in the cryptocurrency market. I mean, Bitcoin is down almost 60% from its all-time high of 20K to under 8 at the moment. And so a lot of people were worried and asking what they should do and what I think about what's happening. And so basically what I want to say is that mainstream media is missing the big picture. The outlook for this emerging asset class is still bright. There are a lot of big developments going behind the scenes to bring cryptocurrencies into mainstream. Now, as for the reasons of the recent nosedive, well, basically there was a lot of bad news that came out all at once. First off, the last couple of weeks, India, China, South Korea all made announcements regarding regulating cryptocurrencies. Now, I don't see that as a bad thing, though I really believe you should be free to do whatever you want with your money. Yet, a lot of scammers and a lot of bogus ICOs coming out every hour, and so definitely some regulation needs to take place. As well, last month, a Japanese exchange lost 500 million worth of cryptocurrencies to a hack. In addition, federal regulators have launched an investigation into Tether, the one cryptocurrency pegged to the US dollar. In addition, there was a lot of fear about congressional hearings on cryptocurrencies, though the outlook looks very bright. A lot of banks put restrictions on buying cryptos with credit cards. So all of this negative news combined created a lot of uncertainty in the market that made people nervous, and that's why we've seen a lot of selling. Now, earlier this month as well, MasterCard and Visa made it harder to buy Bitcoin by classifying Bitcoin purchases as cash advances instead of charges. The difference is important. A cash advance incurs costs and interest the moment you make it. A charge is interest-free for 30 days. Now, the top 5 credit issuers, Bank of America, JP Morgan, Citigroup, Discover, and Capital One, have actually banned the purchase of Bitcoin on credit outright. Now, I would understand the reasons behind that, because some people are responsible when it comes to using credit cards to buy crypto. Yet a lot of other folks have been borrowing on credit cards with the hope of flipping Bitcoin at higher prices. And of course, now that it has dropped 60%, they're horribly upside down. Yet, Tika Tuareg happens to be my guru when it comes to cryptocurrencies, and so when he speaks, I listen. There was an interview with Tika, and so I'm basically sharing some of the insights that he gave. Now, on Tuesday, the Senate Banking Committee held hearings on cryptocurrencies. They heard testimonies from Jay Clayton, the head of the Securities and Exchange Commission, the SEC, and Christopher Giancaio, I'm not sure if I pronounced the name correctly, the head of the Committee Futures Trading Commissions, Commodity Futures Trading Commissions. Now, a lot of people prophesied the hearing would spell regulatory doom for cryptos, yet the reality was quite different. The hearing went very well, and that should finally make crypto investors realize that neither the SEC or the CFTC wish to destroy cryptos. You see, that primary concern for regulators isn't a ban on cryptocurrencies. They just want to root out and prosecute fraudulent coins and unregulated initial coin offerings that are really securities masquerading as exempt utility tokens. It's clear to me that US policy is supportive of cryptocurrencies, crypto assets, and blockchain technology in general. In fact, Giancarlo said, and I quote, "We owe it to this new generation to respect their enthusiasm for virtual currencies with a thoughtful and balanced response and not a dismissive one." Clayton was bullish too. He said he hopes people vigorously pursue blockchain technology. Clayton also said he's open to working with US lawmakers and state regulators to develop new rules for crypto exchanges. I would also like to point out that the volatility in Bitcoin was not as great as the volatility we've seen in other securities. For instance, the CBOE volatility index, the VIX, spiked nearly 116% on Monday when the Dow pulled back. On Tuesday, it rose as much as another 37% to its highest point in years, only to end the day down almost 20%. That was its widest swing in history. Now, volatility exists in every asset class. So the takeaway from this hearing is that regulators are looking for ways to bring crypto assets into the regulatory fold. My sense is that they want Congress to help them by passing laws that will enable an orderly framework for these assets to flourish. They're not trying to ban cryptos, they're welcoming the asset and helping it mature. Now, that will be the end of this talk. Have a good day.